The investing project is about helping ordinary people achieve substantial wealth without upending their everyday lives. The $1 Million Experiment is a real-time example of this project in action. And my foundational premise in leading this project is that I am not an expert in any of these topics. Rather, I'm building a system that weaves in other people's expertise and makes it possible for me, and you hopefully, to achieve tremendous results in a very short time. So remember, I'm not a financial advisor. Don't just blindly copy me. Instead, use this as a framework to integrate your own choice of experts that will help you achieve the results you want. Welcome to the month 5 update for the $1 Million Experiment. Long story short, things are proceeding on schedule and maybe a little bit ahead of plan, actually. The trading met our objective about 1.5 weeks into this past month. The one thing that was a little bit of a black mark on the month was that our alternate account actually lost money. We made our $1,951, exceeding our target quite handily, but we lost $1,068 in the alternate account. Doesn't really count against the $1 Million Experiment, but it just sucks all the same. The investing, the growth account did well. It made almost 4 times the targeted amount. So that's proceeding quite nicely as well. So we'll jump into the spreadsheet and look at the numbers in more detail in a moment. All right, looking at the spreadsheet, let's jump into the details. First of all, on week 22, so this past week, we had very few trades. We only took 3 trades. All 3 of them were losses. This was a choppy, ugly week. We ended up with $460 worth of losses for the week. Not great, but really there was not much to choose from. This has been the last couple of weeks. Actually, if you come and look at the totals, the last couple of weeks have been a chop fest. We had, looking back over the month, we had the first period of time, the first week and a half, we had some pretty good trading. The first 2 days were negative, but then we had this run of $2,400 where net we made $1,951 in the first week and a half, blowing away our target of $1,470. So that was great. But after that, we had this period of time where we finished with our $1 Million Experiment account. We switched to our alternate account. And for the first time since we've been doing this experiment, we ended up negative on the alternate account. We were down $1,068 on the alternate. Now, most of that was because of my stupid decision to trade on Fed Day. I guess I don't know better than this. I ought to know better than this. Many, probably even most professional traders don't trade on Fed Day because the market just isn't doing anything rational until after the Fed decision comes out. And since I only trade the first hour and a half or 2 hours at the most of the day, I would never be in the period where things have been decided. It would always still be the chop leading up to it. And nevertheless, I still decided to try to take 3 reversals that just completely failed. I got run over by on all of them. Anyway, interestingly, if you ignored that, I ended up taking 2 weeks worth of trades. I ended up only down $148. So I was up, I was down, up, down. The whole negative is $148. It's just giant period of chop. Wasn't very good. And you'll notice this last week, I didn't take very many. There were several days I didn't even bother to trade because what's the point? It was just not going anywhere good. And even on the days, the previous week and a half where I did trade, by and large, I was positive, but it was still just a giant chop fest. $300 over 7 trading days. That's just not worth doing. So anyway, this was a mess. But there we are. We have to, of course, count the minus 920. That was stupid, but there it is. And so here we are with, again, we've hit our targets all 5 months in a row. This is entirely the reason I separate out these 2 accounts so that we're not putting at risk the $1 Million Experiment funding and why we can, and how we can expose any challenges that come up in our alternate account. Anyway, there it is. And what we want to talk about now is, so that's the end of the month for trading. If we look over at the investing tab, we have, let's see here, we had been assigned shares on the DRAM position back on, when was it? 20, no, it wasn't the 21st of August. This isn't the sell date yet. What I'm actually, I'll put that in there for a second. Well, we were assigned shares on the 16th of July. We've been selling covered calls ever since. We sold 1, 2, 3 covered calls and made a total of 1, 2, 3. We made a total of $313 in covered call premium on that. Now, what we expect will happen, because right now I'm recording this on Monday the 17th. We have the covered call position expiring on August 21st, this Friday. What I expect will happen is that it'll expire. I know that'll happen. And we will keep the $60 that we've made. The only question is whether or not we will have the shares called away. And at the moment, DRAM is trading above $60. So unless something changes this week, there's a high likelihood that we will be selling. That's why I put the 21st here. We will be selling for $60 on that date. So we will not have made anything on the actual share position. We won't have lost anything either, but we will then be out of the position and able to sell more put positions, cash secured puts. On the other hand, if the stock is priced below $60 on the 21st, we will keep these shares and continue to sell covered calls. We don't know whether it'll be for another 5 days, but we'll make that decision with determination, obviously, on Friday. Meanwhile, we continued selling puts. So we sold the 5 put. I got out of that a little bit early. Sold it for 50 cents. I bought it back for 10 cents, entirely because I had the opportunity on, when was it? I guess it was around the 3rd of August. I had the opportunity last week, was it last week? Or the week before, to actually sell IREN and CDE puts for more money. So I bought that back and then decided to make some other sales. So we ended up net bringing in, so the addition of, say, 120, 146, and 129. So we ended up bringing in 295 on cash secured put premium. So that's basically what happened this month. So the net of all the premium that we sold was $521. That's pretty good, considering we only had, 11,000 and change to begin with. So that's pretty good. We were trying to make 1.5%. We made quite a bit more than that. So we now have, if I go over to the live totals, we've recorded $521. Our target for the month was $154. We're 4 times that. So this was actually just about 4 times. It was a really good showing on the investment on the growth account. So that's good. Now for the following month, for month 6, we of course add another $2,000 into that account. And so that will take us to 13,000 and change. And what we expect we will do is put these on. Now today I put these trades on already because I didn't want to wait any longer and give up more premium. So what I've done here is I've sold a cash secured put on IREN and that's the September 11th, $39 put for $1.77. So we've collected $177 and 2 of the CDE 1750 puts for where we've collected $80. So we made pretty good money here. Our intention always is to make 1.5% or 1% at least per month. We made 4.5% on IREN and 2.3% on CDE. Now, of course, that doesn't mean it's going to always be that high, because you do have periods of time where your money is now tied up in shares that have been assigned, and selling cash secured puts often gives you less money. So if you look here, the sale of this DRAM was only 1%, and both on several occasions, 1%, 1%, and 1.6%. So we had situations where we had 3 different opportunities to sell cash secured puts. Each time we made less as a percentage because you just don't make as much money when you're selling the covered calls. So there we are. And so that's where things sit right now. The only thing that's going to change here is on Friday, we'll find out whether or not we have an additional put position to put on. So right now we're owning the shares. We are either going to put on another covered call, like I said earlier, or these shares will be called away and we'll be looking to put on a new position, probably also in DRAM, just because we don't have that many positions that are right around the $6,000 margin mark, which is how much we have to play with. So when that comes along, we'll make that decision, but we'll have another set of options to put on either Friday or Monday. So that's where we stand right now with the investing. And we have not yet put on anything in the speculation account. That's okay. Like I said before, we want to build up the amount that we have in that account to a level that makes it worth actually trading something. So we haven't gotten there yet. Right now, all we have in that account is the equivalent of about $124. That's not really enough to do anything with. So we're going to keep building up that account, and at some point we will start to put trades in there. But this is what it looks like for the end of month 5. All in all, a very successful month. The only black mark on the month was that the alternate account, after we met our targets, was substantially negative. That sucks, frankly. But you know what? This is a live and learn exercise. And there are things that I've discovered as I've done this that I won't repeat, like trading on Fed Day. But, and also, when I've looked back over some of these trades, actually, if I go to the trading tab and we look at some of these trades during the period of time that was pretty choppy. And the reality is there was a lot of mess from late July right through to mid-August. It was not easy to trade that market. And I have to understand that I need to be more able to distinguish an A-plus trade setup. And when I see an A-plus trade setup, to get into it with full size. But when I don't see an A-plus trade setup, a better idea is to not trade it. Now, it might be, there's two schools of thought on that. One is hold out for A-plus setups, which is not a bad idea. But the other school of thought is to say, no, it's a B-plus setup, let's say, or an A setup, or it's a B setup. Take it with smaller size. And that's a possibility too. If it's a reasonable, legitimate setup in a good place on something that looks like it ought to do what we want it to do, get into it with a smaller size. That's not a terrible idea either. The problem is that it's hard in the moment to distinguish whether it's better to pass or better to get in. It's a little bit hard to tell. And it's also sometimes you get away with saying, I'd like this idea. I'm a bit nervous about it. I get in small size and realize, yeah, this was a home run and wish that I'd gotten in more. The whole FOMO thing, the psychology of it can be challenging. Anyway, long story short, I think the holding out for A-plus setups is how I put this $1 million experiment together in the first place. And if you go back and look at this, the entire spreadsheet and the entire model, I basically said right from the very get-go, if you take the smallest atomic unit of trading, was an account with $3,000 where I could trade one single contract of the micro ES futures. And I would put on that one contract with 15 handles of risk at $75. That's 2.5% of the size of the account. And I would be willing to put that on and risk $75 in the opportunity for the opportunity to make 2 to 1, $150. And I needed to do that at the most. I need to do that a net 2 times in a month. That would have gotten me $300, and my target was $249. And the size, the profit target, and the amount that I'm willing to risk proportionally is identical throughout every one of these subsequent months. Nothing changes. The numbers scale exactly like that. Now, this presupposes that I'm only taking A-plus setups. And they're not all going to win, of course. No, there's no notion of me taking 2 trades and they're both winners and that's it. Of course not. What I'm talking about is a net total of 2 that win. So I might take a number of trades throughout the month, but the net of it at the end of that month is that 2 of them, or in this case, really it's 1.5 of them, are net positive, and I make my $249 for every $3,000 I have in the account. So if I'm extending the logic here, if I have $30,000 in the account, I should be making $2,490. And if you look down here, $30,175, $2,505. Yeah, sure. The proportions are exactly the same. The thing that's changing here, as I've gotten comfortable with doing this over the last number of months, is that I've been taking less good setups. And I don't know if that's a good thing. It may be an inevitable thing because you don't get great setups all the time. So maybe inevitably I take okay setups with smaller size, and that might be the right thing to do overall. But I don't want to lose sight of the fact that all of this is pinned on the idea that I only really need a net total of 2 good setups, good trades in a month to make the numbers. I just have to keep that in mind because it's better for me to pass on substandard setups than to try to force it. So anyway, that's my little self-motivation diatribe there. So back here, let's look at, let me close down this thing. Let's look at our dashboard. And we can see here that we finished month 5. We are proceeding along with, and we're actually really ahead of plan. We're going to continue to do this. The trading account, if we're successful with each month, will continue to compound right up until around month 39 or 40 thereabouts, where it hits the $500,000 mark. And right around that, right at that point, we start to contribute not only a salary that we can go and pull out, an income that we can pull out and spend, but a corresponding amount that will also transfer into the growth account and allow that to really exercise its compounding muscle, which is an important thing because it's compounding at a better rate than I planned. So we may see some significant upside even beyond what's shown here. But if we just stick to the numbers that we're projecting, these two meet around month 59 or 60, right at the 5-year mark. And that's where we have $1 million and a $20,000 a month income. So we'll be extracting the $20,000 a month income starting here. But once we hit that mark, we will have achieved everything we're after in the $1 million experiment, if the numbers hold. And that's the whole point here, is that we're trying to validate whether this holds water. Now, I want to bring something else up. And that is my assumption when I put this whole thing together was that I was going to, based on this atomic unit here of trading 1 micro ES for a $3,000 account and risking $75, that's as little risk as I can put on in an MES trade of the sort that I put on, that I think will be successful. Now, there are strategies where you risk far less for far smaller gains, but in the reversals kind of model that I'm playing with here, that's the smallest reasonable amount that I can get. And so I stay at 2.5% of my account size all the way through here in terms of maximum risk per trade. What I'm thinking about right now is reducing the amount of risk that I take. And partly because I've been putting on at times more than one, sometimes 2, and occasionally 3 trades at the same time. And that is really, considering that I'm betting on the market doing what it's supposed to do, that is taking more risk than I'm supposed to be taking. One of the things I can do here is to actually reduce the amount per trade that I'm willing to put on. So for instance, if I was willing to say, I'm only going to put on 1% of my account size per trade, that's not a bad idea. That's a little bit more industry standard. In which case, if I'm looking at this, where are we going into month 6? If I'm looking at this right now, we've got $19,000, so we've got $22,000 in the account. I'd only be willing to risk $221 if I were putting on 1%. Now, if I'm putting on 2.5%, I'm willing to risk closer to $600. And yeah, I could see it either way. The 1% will require more wins than just a net total of 2, but the wins can be smaller and the losses will be smaller. And if I do get in a situation where I put on more than 1 at the same time, I'm more likely to fit within my intended limitation of no more than 2.5% at risk, even at any one time. And I think there's some logic to that. But the problem I was starting to feel was that I was putting on too many trades at closer to full size and therefore doubling up the amount of risk that I shouldn't take at any point in time. That works great when it all works out in your favor, and it's very painful when it doesn't. So I'm just looking at this as an opportunity to maybe scale down the amount of risk on each trade and see how that goes. Anyway, I'm thinking out loud here. I think by and large, any A+ setups are going to get my full size regardless. I just need to be much more discerning about the quality of each of the setups. I think that's it. Is there anything else we need to talk about? I think we've covered pretty much everything at this point. So I'm going to wrap up here, and we're on to month 6, and it's going well. We're just going to keep at it, and just bear in mind that it doesn't, the alternate account took the brunt of this time around. It's not always rainbows and unicorns. Sometimes the market is hard to trade, and this last couple of weeks have been really choppy. Hey, just a quick wrap up to the monthly update here. And that is that if you would like to download the actual spreadsheet that I showed you, not the one with the live data that we're tracking, but the one that shows the entire $1 million experiment plan and the projections and the tax planning tab and all of that, you can do that for free. It's on our website at theinvestingproject.com. You can also see the link here on the screen and in the video description. So if you want to download that, feel free to do so. You can follow along. You can see how we're doing relative to the plan, when we're exceeding it, when we're falling behind, etc. So it's there for your consumption if you like.